Good morning, good afternoon, or good evening, everyone. Thank you all for joining us today. And thank you, Robert, for joining us late in your evening in Singapore. We'd also like to thank our colleagues at BMO Capital Markets, Cormark Securities, Canaccord Genuity Financial, Raymond James, and all of the Abaxx investors who have registered to join us today. My name is Catherine Flax. I've had a multi-decade career as a commodities trading executive, and I'm a member of the Abaxx Technologies Board. We'd like to keep this discussion informal and make sure we reserve time for Q&A from the participants today. We'll start with some questions for Robert and Josh on the macro outlook and trends in the market, followed by some questions from our colleagues at the financial institutions participating on this call, and then open the panel to audience questions. So I'd like to kick off this discussion today by getting an important perspective from Robert. Robert, throughout your career as a resource entrepreneur, you've always seemed to be a few steps ahead of the competition on macro trends. I'm sure many on this call will recall you introducing the North American investment community to the unfathomable scale of Chinese urbanization long before Goldman Sachs started selling bricks, and later colorfully articulating to us exactly how much copper is in an electric car long before most people knew the name Elon Musk. There's certainly no shortage of ESG talk in the markets these days, but giving us a view from the inside, how has the culture and strategy of the extractive industry changed over the past few years? And is there something bigger going on here than simply selling a new macro theme to investors?
Wow, well, Catherine and Josh, it's a pleasure to be here. I'm in Singapore, 1 degree north latitude, and it's hard to open with such a big question, but bottom line is everything has changed. And the incumbents are like dinosaurs having to deal with an asteroid coming in at a low angle and changing the climate. I think that they're still like deer caught in the headlights, most of the major incumbent mining companies. You had one of the big iron incumbents got a lot of trouble for 8 days worth of mining iron ore in Australia, with an incalculable damage to the brand for 8 days of mining. So, and that was mining iron. So we're seeing a world that has radically changed, where every one of these hand phones is an NGO, every single hand phone. And it's linked directly to every non-governmental organization and media organization in the world. So mining is living in a world where there's no place to hide. And it's the same thing in oil and gas. And the world's turned, turned upside down. It used to be you could be based in London or New York and be surrounded with a fleet of lawyers. Now all politics are local. If you can't get along with the local community, the people around you, whether it's oil and gas or mining or any other raw material, it's immediately known around the world with social media. So it's a very disruptive period. Everything has changed. We're still in the middle of that change, but we're seeing that this has caused unprecedented scrutiny of the supply chain. In fact, the very concept of the supply chain is now something that is going to become ubiquitous and better understood.
I love your analogy about the asteroid hitting the dinosaurs. I think that's so apt for exactly where we are. So look forward to exploring more of that with you. Let's introduce Josh. Josh, some of the audience on the call may be less familiar with your background and views than Robert. So maybe we should start by asking you to give us a quick introduction to yourself and Abaxx and what brought us all together on this call around this theme.
Great. Thank you, Catherine. So I guess some of you may know I'm a mining engineer. Actually went to the Colorado School of Mines with Robert's son, Govind, and got to know Katie in capital markets, working for the Lundin Group, which seems like a totally different world before the financial crisis. And then so sort of got to see the first part of that super cycle from the upstream side of the industry. I then went over to Goldman Sachs just after the financial crisis, where I worked under Jeff Curry, looking at global macro, and I was the head of metal strategy for the firm out of London, and really got to know the trading markets and the commodity futures markets and all of the infrastructure that it takes to trade and manage risk in these supply chains. That said, I'm a builder. I came back to Canada. I thought it was a lot more fun doing things like Robert and Lucas. And so I've been really focused in the intersection of where technology meets commodity markets and commodity trading. Avex was formed about 3 years ago, focused on, and I will admit, while the energy transition and what we were seeing in global natural gas was always the core sort of, reason that we put this company together. One of my co-founders out in Singapore, was the former chair of the natural gas committee at NYMEX when the NYMEX formed the Henry Hub futures market. So, we've got a lot of experience on our team in building commodity markets from the ground up and trading in futures markets. But the early reason for putting this company together was focused on the technology. But that said, probably about a little over a year ago, I would say sort of everything changed. The light bulb really went off for me. It was actually before COVID really was gathering pace in the West. I was at the Goldman Sachs Global Macro Conference in Switzerland with Jeff Curry, my former boss, and we had this kind of very quiet conversation where he very quickly said, I think things are different this time. I think this really is changing. I think the extractive industries are really going to have to change this time. And that was sort of before COVID. And of course, we've seen the transition of the global economy and as like I just say, the entire global economy is following the Chinese sort of economic model after the financial crisis, where it's both monetary stimulus as well as fiscal stimulus. And a lot of those checks, as we all know, are going to come with much more focus in social and environmental goals of the populace. So I think everything changed there. But from Abex's perspective, our core business is still building a new commodity futures exchange in Singapore, focused on global the global energy transition and liquefied natural gas. As we think that natural gas is going to be still over the next 10, 20 years still the most important commodity, particularly as oil and coal are reduced. But one other again reason for this call, beyond the technology, we really wanted to make sure we looked at the growth of carbon offset markets. That's been particularly attached to LNG, and we can talk about this more in the conversation today. But we're seeing this trend that environmental desks and LNG trading desks are starting to merge, and that we know that LNG is going to be a very key import and export commodity in global energy, and many governments are going to want that import offset. So we see a natural link between the two, and we've really been focused on developing standards, just like we have in the LNG market. We've been focused on developing standards in the carbon market and in the carbon offset market. And the last thing before I sort of turn it over to the next question, I do want to make this presentation. One of the reasons why we wanted to circulate this, quite broadly, is I really want to make this sort of if I can be so audacious, the call to action for Canadian capital markets to really lead the way in developing this energy transition and in particularly the rise of carbon offset markets. I mean, we've seen what Canada's been able to do in the say the cannabis sector or blockchain mining, taking these sort of nascent trends and capitalizing it with billions of dollars. Well, the carbon offset market is going to be 15, 20x where it is today, and just orders of magnitude more important and more profitable, more scale, more capitalization than cannabis or Bitcoin mining. And I really think this is an important time for Canada and Canadian capital markets to lead the way in this transition.
Well, thanks, Josh. I think this call to action is exciting, and look forward to digging in a little deeper with both of you on investing in this sector. So Robert, it probably won't be a surprise to anyone on this call that metals like copper, nickel, and cobalt look to be big winners as we move to renewable-based electrification of the economy, transitioning away from hydrocarbon-based energy sources for transportation and power. Of course, the Ivanhoe Group has been involved in these sectors for a long, long time, but what are some of the ways that a savvy resource investor can gain an edge when thinking about what companies, ways to look in these sectors? What parts of the metal supply chain should they invest in? And what will differentiate one miner from another going forward? Should we think about investing in different parts of the battery metal supply chain any differently than we perhaps did in the past, from mining to smelting and refining to trading or industrial manufacturing? There's a lot there.
When you change transportation alone, you change everything. So when Henry Ford figured out how to make a car in 93 minutes, that triggered a phenomenon where he could sell as many Model Ts as he could build. The lines to buy a Model T in 1927 exceeded the lines to buy an Apple phone. And there were hundreds of automobile manufacturers that came and went, like Studebaker, Duesenberg, Packard. They died and went to heaven, but the automobile went viral, and the big winner was John D. Rockefeller. That phenomenon led to to 100 years where hydrocarbon became the biggest business on the planet. And as we reduce hydrocarbon, first stepping down to LNG as a transition fuel, and then we go to renewable energy, there's 6 or 7 elements in the periodic table that are going to be huge winners. And it's still going to be a good idea 5 years from now, 10 years from now, 15 years from now. I've been telling everybody, when Ronald Reagan was president and Paul Volcker ran the Federal Reserve Board, if you just got long bonds, that was over 30 years ago, that was a great trade until right about now. And now the bond market is not looking like that good an idea, getting long bonds. But these certain metals are going to be not only under enormous demand, but they're going to be traded in relation to their characteristics. And because we're all familiar with crude oil and sour crude and various grades of crude oil, we're quite confident we're going to have to see smarter markets where all of these commodities are linked back under their ESG characteristics back to their source. And one of the quickest ways this is likely to happen is just the imposition of tax on carbon dioxide. We call it carbon taxes, but not carbon, the element in the periodic table, but carbon dioxide and methane. Once we tax, the generation of carbon dioxide, then all commodities will be traded differentially at a premium because they're low generators of carbon dioxide, or at a discount. And we're going to need smarter markets. And that's why I got so excited to listen to what Josh and his partners had to say at the beginning, because it makes great sense. And it's opening soon to a theater near you, right here where I live in Singapore.
Excellent. Josh, you're a mining engineer and think a lot about this transition that Robert was just talking about in the extractive sectors, but your view is that there will be ongoing change in the way the supply chain sources and trades these commodities as well, and the way they manage risk during a volatile transition of inputs and supply chains. Can you tell us what you're seeing from the side of the business and a part of the business perhaps a little less familiar to many upstream resource investors in Canada?
Yeah, absolutely. Thanks, Catherine. So when we look at the oil trading markets, Robert mentioned, WTI and the Brent oil markets, and these are different standards, and these are different, what's known as buyer and seller of last resort markets, where the commodity markets could gather around and not just trade, over the counter, trying to find partners, through this sort of, complex global system. These markets emerge where standards and ability to manage that risk. If you had a disruption in your production and you didn't meet a delivery that you had already booked, or the change in weather or some event, changes your demand outlook. These are the markets where people can go into without having to signal exactly, that they're long or short. So this is, these are the types of markets that we think are critically important and don't yet exist for markets like, even as unbelievable it seems, even like something like LNG. And so that's where we saw an opportunity as the big exchanges, really have focused much more on the financial products and creating new indexes and new derivatives based on, third-party indexes. But the real hard work of trying to organize a global supply chain around different benchmarks. We think there's sort of a niche in that market to have people with great commodity experience to do that for things like LNG, but ultimately things like carbon offset markets and parts of the battery metal supply chain that aren't transparently priced, and there's no easy way. If you will go out to go get project financing and you want to sell some metal forward, you have no idea if the price is going to be $2 a pound or $200 a pound. We need those types of markets to be able to capitalize all of this infrastructure. Again, my former colleagues at Goldman, reckon that to meet the goals of the Paris Accords, we're looking at something like 17 trillion over the next decade that's needed to invest in commodity infrastructure for the energy transition. And again, this is oftentimes reliant on metals and energy sources that don't have those forward hedging markets to be able to deploy tens of billions of capex in a new project. So we're very much focused on that. And if you look at just the profitability of these commodity exchanges, what's Avex's exchange business model? You look at something like the WTI. Well, that generates about that trade generates about $500 million in revenue a year for the CME group for people trading that WTI contract. So that's the sort of business model, and we think LNG and carbon are going to be two of those elephants. If you compare it to the resource industry, these are some of the core tenets of a global exchange, and that's what we've been focusing on in this energy transition.
Absolutely. And, I guess I would add that there is a real new era, I think, that we're experiencing in commodities trading in financial institutions that I think, had been quite soft for a while. I think many large institutions, some of our prior employers had maybe diminished a little bit of their presence in the physical commodity trading markets, partly like many companies with the pressure on fossil fuels and I think trying to figure out what's their place. But I think we're seeing right now tremendous new opportunities because of the energy transition. And we can see that there's still a lot of dislocation in these markets. I mean, certainly, again, a number of factors, but the issues in ERCOT that we saw in the power markets underscore the need for transitional fuels, and LNG being, obviously the major one. But there's a new era in voluntary carbon. Apologies for the noise. Somebody next door is doing something. But we were involved very much in the carbon 1.0 markets in the late 2000s, and a little early. And what we're experiencing right now is really voluntary carbon 2.0. And what we're seeing is that it's really a tremendous push from companies themselves. And although I agree with what Robert said, that there's likely to be quite a lot that's going to come down from governments in terms of taxation and so on. Right now, the demand is very, very strong because of investors, shareholders, and companies just themselves wanting to do the right thing, who have now really engaged deeply in wanting to be in these voluntary markets. And we would be in a really deeply structurally short situation right now were it not for COVID. But now that markets are heating back up again, I think we'll find ourselves in a situation very, very quickly where people are going to recognize that there aren't enough carbon credits to satisfy all the demand from the companies, which obviously from a trading perspective makes these pretty interesting and exciting markets. And so it's a wonderful time to be where we are today and having this conversation today, because it's very well timed. And Robert, I'd love to hear more from you and your perspective on this, because obviously decarbonization is a big part of the theme that we're talking about today. And how do you see the markets adapting to carbon neutral goals being set globally by governments?
Just imagine that you were a young guy, 35, 40 years old, running one of the Middle Eastern countries, producing crude oil and watching the price of crude oil go to zero and then go negative. And you got to, generate employment for all the young people in your country. And you start thinking about this energy transition. This is such a magnificent, massive change. It's not 17 trillion. The numbers we've seen is like 100 trillion over the next 20 years. And, a trillion isn't what it used to be. I mean, Joe Biden is throwing around 2 or 3 trillion here, 2 or 3 trillion there. The Chinese think it'll take 20 trillion to rebuild the American electrical grid so that everybody can plug in an electric car at 5 p.m. So in a lot of these commodities, we're facing disruption like trying to get the contents of the Hoover Dam through a garden hose. And we're going to have to find a different way to trade these things and hedge these commodities, because we only have one periodic table. If you can picture a periodic table there behind me, there's 6 or 7 elements up there that are really huge winners, and they really become a proxy on money. You've seen rhodium go from $1,000 an ounce to $30,000 an ounce, or cobalt's up 40% in the last month or two. And these are incipient moves. We don't really see the huge demand from all these gigafactories being built for batteries. It's easy to declare that you're building a gigafactory. It's quite another to actually make the batteries out of something. So, I think it took hundreds of years for humanity to realize that the Earth was not in fact flat. Then it took quite a long time for people to realize that the Earth actually revolved around the sun, not the opposite. And the concept of global warming, anthropomorphic global warming, has been debated for 30 years, but it's getting embarked in governmental policy. And it's very easy to pass laws about electrification, but the tertiary implication on raw material demand and the supply chain is very incipient. It's very early. And it's going to have a very massively disruptive impact on markets. Now, the perfect business is a royalty business. It used to be reserved for the King or Queen of England. If I were the Queen of England, I'd give you a license to go sink a Spanish ship as long as you paid me 12.5% of the profits. But if you own a market, if you own the bazaar, and you take a little bite out of every trade, that's like a royalty. Once you build a bazaar and everybody's coming to you, and obviously I'm a big fan of Singapore, we're sitting here right smack in the middle of 4 billion people. Most of the world's economic growth is happening in the Asian time zone. So this is the perfect place where the government is looking forward to these sort of forward markets. You can see that 5 years ago, if we were trading iron ore, the Japanese steel mills would start arguing with Rio Tinto and BHP about the price of iron, and they kind of orally reach a compromise. Now the Singapore iron contract is the dominant contract. They just made a fungible contract. And the Singaporeans say, this is great. We're getting a bite out of every trade. So Singapore is a very clever government, very favorable government for new age markets. So look what's happening here. The World Economic Forum is coming to Singapore. It used to be in a little town in Switzerland. Ray Dalio runs a $180 billion fund. He's moved here. The vacuum cleaner guy, Mr. Dyson, he makes great, hair dryers and vacuum cleaners. He's here. So Singapore is just impossibly hip and intelligent and well run. And they're buying into this theme of these disruptive, smarter markets. Because what comes first, the chicken or the egg, the disruption or the market that enables the disruption? So there's going to be the development of much more interesting, much smarter markets. And we're sitting here on these giant internet pipes here in Singapore. We've got the fastest internet that you could imagine. This is the place, and so I was very attracted to, the veterans that are surrounded around Josh. And it's a huge privilege to be an angel in something like this. I mean, such an obvious idea, but it takes a lot of work to execute. So opening soon at a theater near you will be a market where, with the miracle of blockchain, we'll be able to track every single commodity right back and follow all of its ESG characteristics. Now, without that, we see aluminum, clean aluminum is trading at a premium today, just voluntarily. There are German automakers that want green aluminum. They're willing to pay more for it voluntarily. But I don't think this will ultimately be a voluntary system. I think governments are enforcing a transition. The minute we see a carbon tax, that's going to really make everything very interesting. So you need a flexible technology in place to trade these credits. And that's going to be an enormous opportunity for Abaxx's technology.
And Robert, with those governments that you anticipate coming in and perhaps placing caps or taxes on carbon, do you then think that the markets will eventually evolve in a regional nature, or do you think it will develop like other commodities as a global commodity to trade?
Well, London was a great market. It was on an island, and it enjoyed a time zone called Greenwich Mean Time. That worked really well for about 3 centuries. There were actually clocks in England that set Greenwich Mean Time, for which everybody in the world set their clocks, right? But the time zone that encompasses Hong Kong, Singapore, and Beijing is a really big deal. And just physically, as a port, the Singapore port is one of the biggest ports in the world. And you know that the Asian economy has become the epicenter of the world economy. So there might be room for a London market and a Singapore market, but it's blatantly obvious that for commodities like take crude oil or take LNG, where are those markets being made? They're being made in this time zone with and the demographics. I mean, just Indonesia has hundreds of millions of people at very young age. Southeast Asia, China, India. This is where the action is. This is the logical place to make a smarter market. Obviously, the incumbents have something to worry about, right? But the innovation is here.
Excellent. Josh, I know you and Abaxx have been quite engaged with the global trading community. How do you see the carbon emission markets developing?
Yeah, so I mean, it's like I said, I think there was a real step change over the last 12 months, and I would say that, two other events that really happened is one is the French government essentially vetoing a long-term offtake deal from the Gulf of Mexico because of the upstream emissions of methane in U.S. shale. So you had one Western government essentially vetoing a contract with another two businesses in Western countries that got vetoed because of the emissions. And so I think that really woke up the LNG industry very quickly, as well as China, coming in with their 2060 carbon neutral goals late last year. I think both those events, again, really got people trying to get very smart on offsets, scope 1, 2, and 3. How they need to start trading and planning this even before maybe all the government regulations are clear, particularly in the U.S. and China, being the largest economies and driving this. So I think one good example to look at, as a company that did very, very well early in thinking about this was Microsoft. So Microsoft, I think as early as 2012, started buying, investing in nature-based solutions to create carbon offsets in their scope 1, 2, and emissions. The way anytime employees flew around and various internal processes, they've then expanded that, and that really started with a grassroots sort of group within Microsoft, and now January 2021, you've got the CEO of the company saying it's one of the most important things that Microsoft is doing is moving to scope 3, where they're going to start looking at not only carbon neutral by 2030, but carbon negative, and trying to take carbon out based on their profit, and looking at the electricity used in an Xbox downstream, and trying to offset that as well. So you had companies like Microsoft that were early, and a number of the big oil and gas majors. We should give them some credit as well in developing some of this work 10, 15 years ago, and really coming to their own as leaders in the way this develops. But you have a long tail of companies that are only starting to read the very first 2-page summary, right? And that is changing very quickly. First in the energy companies, as I mentioned, the LNG. Avex, we've been working with all of these companies for the last 2 years, standardizing LNG contracts. So now we're in a position to work with all of their groups, some of the early movers, some of the late adopters, and they are very busy developing standards, and we've been a part of that process. But that's not just going to be the energy companies. That's going to be every company on Earth soon are going to have to get smart about these measurements and trading. And so, yeah, again, this is just a massive opportunity for Canadian capital markets.
Well, exactly. And I think, as you said, I mean, many companies have already been very clear about their net zero commitments or negative, carbon commitments, or just reductions. But what we're seeing too is so many companies that are very cognizant of the fact that they're going to be subject to much more favorable lending rates if they can prove that they're doing these things. And so that's a big motivator for many companies in a very practical way to get very clear on how they're doing this and getting it done now. Josh, can you tell us a little bit more about Abaxx's plans in Singapore and how the team is placed globally?
Yeah, so we really are. I mean, the operations and trading and risk and policy is really focused in Singapore. For all the reasons that Robert laid out. That said, it is a very global market, and like I said, I believe Canadian capital markets are well placed to fund the type of initiatives, early initiatives. So we are a Canadian public company. Our actual sort of parent co. Is really focused on the technology, and then our subsidiary Avex Singapore is actually the entity getting the regulatory licenses, the exchange and clearinghouse license to operate this market. So our team is really focused globally, and we have some other technology initiatives, particularly what we can do in the tracking and tracing, the measurement, verification, reporting using our technology tools. So that will be applicable for businesses outside of just our exchange. But you really have, again, think of like a mining company that might be headquartered in Canada, and the capital markets is focused in Canada, but their operation maybe somewhere else. So our operations and the real soul of our company is Singapore. But we are traded in Canadian capital markets at this point.
Excellent. Well, I think some of our investors would like to hear more about the technology, but before we go to investor questions, Robert, maybe before we do that, would you mind introducing the audience to your background with Josh and Abaxx and what you saw in the opportunity in Singapore or beyond?
Well, both my younger brother and my son went to the Colorado School of Mines, which is the best school for mining and oil and gas on the planet. I'm sure they would agree. And so I knew Josh because he went to school with my son, and small world. And we have another mutual friend in Lucas Lundin, somebody I hold in the highest regard, a dear old friend. So, the sharp end of the stick is quite pointed. Opportunity comes to you the way it does. But before I forget, I just want to mention to everybody, it shouldn't surprise anybody when all you have to do is go to Google and read China's 5-year plan. They lay it right out there in black and white. I first went to China in 1981. I've never seen them fail to execute their 5-year plan. So one of the most mind-blowing things that's happened in the last year is that the government of China has announced that they're going to be carbon neutral by 2060, which is tomorrow morning, actually. It's sort of like the time period from which I first went to China. So it's right there in black and white, and it becomes a self-fulfilling prophecy. You don't want to be wrong the wrong stuff, and you want to be long the right stuff. And very, very quickly, this snowballs much faster and much quicker than anybody anticipated. And the problem now is that we need a market that is smart enough to just pull all this together. And so markets themselves are going to be dramatically reinvented. Thank God that Ethereum exists and the blockchain exists, and that this company started 3 years ago with a government that is ready, with a monetary authority, with a governmental structure that's ready to make it happen. This is an amazingly interesting thing because we're mining stuff. We have to know where to mine it, how to mine it, who to sell it to. So we've done a hugely deep dive, for example, into the battery vertical. Just the phenomenon of storing electrical energy in a battery is so disruptive, and its impact on raw materials. Vast fortunes will be made for those that get it right, and vast fortunes will be destroyed for those that get it wrong. And the intermediary is the market, right? The structure of the market changing, and it's really going to happen with astonishing speed and intensity. That's what makes this discussion so interesting, because you can't have this transition without the disintermediation of the market and the intermediation of the market. So whoever sits there in that market gets valuable market intelligence, data, insight into supply and demand. That means all the banks, all the financial institutions have to come running, because what could be more real than real-time information in these markets? It's a phenomenally interesting subject.
Is it? Absolutely. And Josh, before we get into a few investor questions, can you start with giving everyone a quick update and overview of the project ahead of launch of the Abaxx exchange?
Yeah, sure. So when we look at the project, there's really three areas that we, outside of the financing piece, that we focus on. One is the actual commercial engagement of the market, the work we do to organize the standards and get a market sort of ready to trade, something that everyone agrees on, and that's a very difficult process. It's like you pass a contract around in a circle, and if someone says yes, that's a good contract, it's probably not a good contract because it's probably too favorable for them. If they say no, I can't trade that, then that's a bad contract. You kind of need everybody to say, I don't like it, I don't love it, but I will trade it. That's what makes a very good contract between a buyer and a seller, a market maker, a financier. So we've been engaged in that process for a long time. And I like to say we have over 100 firms ready to trade second. The key thing is then getting those first ones that really are ready. And we've been engaged, as we've disclosed in our, in some of our press releases, we have been engaged in working groups to get those first companies ready to trade. And this is, that's sort of where we're at there. So I'd say we're at the sort of 90th percentile on that side of things. The second piece is the technology. We talk a lot about blockchain and a lot of the ancillary services, and we can probably talk a little bit more about that. That part is still under development. It will be constantly under development. But that said, when we launch our exchange, we are using traditional technology from NASDAQ in sort of the first phase, and then the traditional ISV, the connections, the middleware to the bank's trading platforms and the energy traders. So the goal is that anyone that trades on our exchange can buy and sell just like they're buying and selling WTI. So that infrastructure again is sort of at the 90th percentile. We've invested about $22 million to date. A good chunk of that is on the technology. And the third part, of course, is the regulatory. And so on the regulatory side, before we went public, we did get our approval in principle on our exchange license. So that allowed us to sort of get to this, this sort of final ramp up phase and go public. And then, but the last piece that we'll need on the regulatory side before we launch is the clearinghouse license. And this one, for us, it was very important for us to have, our own technology, our own exchange, and our own clearinghouse. So we really built this full stack, which is much more difficult, but we think much more valuable long term to not be reliant on other parties to develop new products. So that's the last piece. Again, I want to refer to our previous disclosures in our AIF and our press releases. We do expect, we're working towards, having all three of those areas of the project internally ready during Q2 here, including an approval in principle in Singapore. But that said, it's much more important to get this market right than get it done in a specific time frame. There are pieces outside of our control, not only the regulatory, but our connections and the risk policies of the FCMs, the banks and the futures, commission merchants that connect to our exchange. And so, again, our goal is to be internally ready in Q2, with a launch, we've said generally this summer. And so, so far everything's tracking on that. So yeah, I think that's probably the simplest answer. We might get some more details.
Okay, terrific. Well, in addition to the exchange and the fintech suite of products, Abaxx has a large iron ore resource from the legacy acquisition of New Millennium Iron. Can you touch on some of the plans for these assets as it relates to the global energy transition?
Yeah, absolutely. So, again, admittedly, going into the RTO, the merger here, I wouldn't say we thought it was worth zero. As a mining engineer, resources in the ground are always valuable because things on top of the ground change. So we certainly were interested in the iron, but I wouldn't say it was a very high priority. I'd say one thing that has changed, beyond just the iron ore price, is the global stimulus and infrastructure and the demand for steel has changed. And the price is really, we're getting up to record iron ore prices. But I would say beyond that, I think the fact that it's in North America, it's in a very hydro electricity friendly jurisdiction, and the fact that we're going to see more and more governments focused on closer supply chains and also pricing commodities differently for their ESG. We think the whole sort of economics that are positive have potentially changed. Particularly if we want to get away from using coke and coal in steel production, and we need higher grade sort of consolidated taconites, that sort of thing. So long story short, I think our immediate focus is of course launching the exchange, but we do think there are things they're doing new ways to study our deposit around green steel and closer supply chains. And I would obviously love to get Robert's thoughts as well on steel in general, maybe not necessarily our deposit.
When Avex took over a Canadian shell with several billion tons of iron ore, that iron ore is better than a slap in the face with a wet fish. And it's a lot better than a poke in the eye with a sharp stick. Iron ore being reduced to steel is responsible for about 9% of global warming gas. And of course, moving the ore around the world generates global warming gas. And the way we're heading in North America is electric arc furnaces are making 30 or 40% of the steel. And they can use DRI, directly reduced iron. And you can do that with natural gas, or if you have hydropower, you can make hydrogen and you can make steel with no global warming gas at all. And you're going to see a change in government policy. Take a look at how green Canada wants to be. So the value of that enormous resource in the world is, as I said, better than a slap in the face with a wet fish, given that our shareholders paid zero for it. And it had, an $800 million valuation in the last iron cycle. So we're getting some really smart people to look at that resource. And maybe we can come up with something and sort of conjure up some very magic value. It's an enormous resource that has to be looked at, again, very carefully.
Absolutely.
Terrific. Okay, I think we're going to now shift over to some questions from our investors. I have a question from Raymond James. Robert's been an early supporter of Abaxx since its founding. Can he touch on the early support for a physical LNG contract and that has now expanded to try and include the ESG component of the trading? Has ESG demand accelerated that much in the past 2 or 3 years?
It's accelerated more in the last 12 months than in our entire lifetime. Everything has changed. So the number one traded commodity in the world is crude oil. That's what made the Beverly Hillbillies or the Saudi royal family, okay? You just want to look at the last century. And if we go back far enough, it was stone wheels and cowrie shells. But for the last 100 years, it was crude oil. And then closely behind that is natural gas. But when we realized that you can compress that natural gas and move it at very low cost, and the ships that move that natural gas consume a little bit of that compressed gas getting it there, you get halfway there to reducing global warming gas, clean, efficient, cheap. And in the Chinese cities, for example, where they're smoking out their kids, there's a lot of particulates. There's a huge pressure from the Chinese population to clean the air. LNG is such a phenomenally attractive alternative to sort of compete with crude oil as a transition fuel. And it is an enormous market. I mean, people are talking about rare earths. They're not rare and they're not earths. The whole rare earth market would fit in a teaspoon. So trading rare earths is a waste of time because the market's too small. Lithium is a tiny little market, okay? When you want to talk markets, LNG is an enormous market. And if you can just get a little bite, like little bite out of each of those trades, that can be an enormous business. But the same mechanism and software and franchise in which you're trading that commodity is fungible to all the other commodities. It's a relatively minor matter then to trade cobalt or gold or silver or anything else you want to trade. The main thing is to be able to establish the market. If you own the bazaar and people are coming to sell their vegetables and potatoes at your bazaar, you can charge everybody a little fee for setting it up in your market. So the magic of how you start a market, I was listening to what Josh says. Of course, I don't see any of that pain where I sit. I just see the demand for the market. I see the interest in the Singapore government and seeing that market established here. The fact that it's complicated and you have to have all these old timers that built markets like the NYMEX or the COMEX, that creates a barrier to entry. And that's what makes it so attractive once it's up and running. It's a fascinating opportunity.
So another question from Raymond James, somewhat related to the ESG markets. NFT has been getting a lot of headlines lately, and Abaxx will be using the NFT concept to create smart contracts for ESG. Is there an opportunity to spin part of the tech suite out from the exchange business and potentially unlock this value for Abaxx shareholders?
Before you answer that, Josh, there's a little kid from India who paid $69 million for that NFT painting right here. Like, who is this kid? He's running around in Singapore, 69 million US bucks. He said, hey, I said, I'm not interested in selling it. Imagine how much money that kid make if he can blow 69 million US dollars on something he can't hang on the wall.
No, I mean, absolutely. And I think it's one of the reasons that we structured the company as we did, where we've got a technology business up top and the subsidiary is the exchange. So we do have some separations, and we do see, these marketplaces and the tools that we've been building for 3 years, right? So when we saw the NFT, headlines, I started laughing because we wrote patents on a lot of that stuff, 3-4 years ago. And everything that we're doing as a non-fungible, sort of contract for an actual specific cargo of LNG is the same thing as writing a non-fungible contract for a piece of art. It really is the processes of the way people sign and verify that you've got the real thing, the way you reduce a file and to its cryptographic hash, and then post it in the blockchain the way the way we used to send ourselves a patent idea and registered mail and get the government to stamp it. That's what people are using the blockchain for, is to timestamp in a way that nobody can change, a reliable proof that you've created something or you own something. So we've been building on those systems for many, many years. And this is what we could do in these other markets. So yes, we are exploring other markets to utilize our technology. But the first thing is we want to get the credibility of using that technology. And there's a lot of smart people building this type of technology infrastructure, but not all of them have a regulated exchange that will be trading some of the most important commodities in the world, right? So that's why we have these two companies working together. But absolutely, we want to use our technology or allow to license our technology or even open source parts of it so that people can bring markets to us.
Excellent. So more questions from investors. Can you talk a little more specifically about the Abaxx business model and when you expect revenue and profitability?
Yeah, so on the, again, because this is so regulatory heavy, we'll have spent, probably, $25 to $30 million in investment, and then another 10 million that's needed in the clearinghouse as our regulatory risk. So there's a lot of capital before we actually, get our first dollar of revenue. But that said, again, Robert, you used the iron ore market in Singapore as an example. That is one market that we're looking at as an example of ramp up. In the early, this year, next year, we're really focused on physical, commercial users of the product, selling, having block trades, using our futures curve, developing the open interest in the market. So we're actually not focused on the profitability near term. We're focused on the commercial users using our market. Once there's commercial users with a physical open interest, forward curve, traders will trade anything. So I mean, we've seen the way people trade, a lot of these, fundamentally worthless crypto tokens because they have volatility and you can measure them and map them. Right. So we think, bringing in traders is not, and therefore long-term revenue is not the challenging part. The challenging part is getting commercial users to adopt standards and trade. So I would say, I'm not focused necessarily at least on the exchange side, on profitability over the next 12 months. Although, if the 100, if the market participants all to come together, it could ramp up much quicker than particularly with what we're doing in ESG, that's unique versus other exchanges. So it could come quicker than the ramp up of, say, the iron ore contract. But yeah, I mean, for the most part, we're just focused on solving those commercial needs first, and then we'll figure out ways to monetize both our technology and our exchange with more trading revenue over time.
So this next question follows nicely from that one, which is, an exchange thrives on liquidity, and liquidity requires a critical mass of institutions actively trading. Can you comment on how many institutions are likely to use the LNG exchange when it eventually launches? How is Abaxx courting future participants?
Yeah, so again, this is a process it's very different than a technology company where you sort of get this minimal viable product, you get a few people using it, and then you spend the next 5 years trying to sell it, right? Well, we kind of did the opposite. We spent the last 3 years trying to sell it before we even traded one contract. So we have been building that critical mass. But again, these are very big institutions, right? I mean, it's not just the trader that needs to buy off, but it's maybe a trader in 3 different countries and 3 different time zones that need to sign off. But the one thing that I'd say has really been a game changer for us is our work in ESG. Actually, originally led by Catherine and a lot of the relationships she brought to the market. It has changed the tone of what we're doing, where LNG traders, commercial traders in the weeds really liked what we were doing. But maybe it was hard to get the C-suite, motivated to participate in a new exchange and the new risk and everything else. But I would say that our work in ESG and what we're looking at in carbon offset LNG, I think has really changed the momentum for the better, particularly over the last couple of months. And so again, we think that sort of 100 major companies ready to trade second, we think we can get that down to shifting more of them ready to trade first.
Excellent. And do you anticipate having precious metals or battery metal futures trading on the Abaxx exchange in 2022?
Yes, we do. I mean, we've been working on precious metal. We've been working on a gold contract specifically because there's a lot of market structure problems in the LBMA and COMEX. So that one was obvious. Not that there isn't lots of already trading of gold, but the structure itself of the market has some fundamental problems. So that's where we looked first, rather than just a market we like. We wanted to actually try to solve a problem with our expertise. So we're starting in gold because one, it's the largest of the metals markets, but also from a trading perspective, but also it's very different than an energy contract. In metals, you're focused on warehouse receipts and metal that's sort of already in place, whereas energy, it's sort of constantly moving. So having a market, developed both for spot and futures markets of metals, it's a very good piece of the puzzle to also have the expertise in energy. But once we have the gold contract, we can get up into other precious metals. And I was actually, speaking, just this weekend with one of the largest traders of nickel in the world. There's some real problems in nickel markets as well. Particularly given its need in electric vehicles. So I would say, nickel is another market that we're looking at also. But again, all of these, as Robert, so colorfully explained, they're very small compared to the very large energy markets. But that said, we're in business to help solve the commercial needs of the energy transition, not just focused on the biggest contracts, but sometimes just some of the more important, sort of bottlenecks. So 2022 we'll focus a lot on battery metals.
Great. And Josh, do you have any plans to commercialize ID++ separately instead of just to the customers of the Abaxx exchange?
Yeah, we've spoken about that a little bit in the NFT. So just very, very high level, very quick, what ID++ is. This is our identity protocol. Think about it as a much more secure version of DocuSign, right? Like when someone signs their electronic document, it's much more like having a notarized document from the way people can trust the signature. So ID++ it is open. We are working on open protocols. Very much like SMTP email. Like this isn't just one company that built email. It was a protocol that everybody shares. So what we're working on is building this protocol for signatures that can be used in all across the world, rather than having everybody just come to one platform like Amazon Web Services or something, right? So we want to build an ecosystem that's very interchangeable for trading these documents and so forth. So again, that will be very valuable in what we're doing in commodity trading, but it's applicable to anything on the internet. So yeah, I mean, we are looking at some other use cases for that. But again, our sole focus right now is getting up and running on the exchange, and then we'll continue to think about commercialization of these products in other places too.
And do you see a role for ID++ in sustainability-linked financing, such as in qualification verification?
Absolutely. And in fact, we think that's where these markets all start coming together. Our technology, the ESG, and the commodity markets and our relationships all start coming together, is that, verification of these offsets is going to be one of the most difficult pieces of the puzzle, right? So right now it's, there's many different, offset standards in the measurement, how you get the baseline, how you prove that this forest is not reducing carbon. These processes take a lot of documentation. And if I'm, Shell or BP or somebody that's trying to, buy or sell these offsets, either that I've been developing, internally, or I need to buy externally. Right now, it's very much like the LNG trade. It's going to take, many lawyers, many weeks to come up with a set of terms to be able to trade them. And then you have the problem of, okay, who's, just like if you think about assaying copper or something, who's the qualified assay standard? These are types of things that go into the contract. Well, that's going to be even more challenging on a global scale, particularly where some regions, the country may already be using that offset for their governmental, mandates. So a private company can't go use that as well. You can't double count it. So these types of standards, and look, and it's very impractical to think the entire world's going to join, one web-based platform to do this, right? It's not going to be one company that's going to bring on everybody in the world to use their set of servers. That's why we need blockchain. That's why we need standards like identity protocols to make sure that everybody, there's a lot of smart people doing very smart things in tracking the supply chain, far more advanced than what we're doing as far as, actually working with mining companies and doing that. We want to bring some tools to make them interoperable in our exchange, rather than trying to, be a monopoly that takes the entire world market, because we think that's unrealistic. So we want to bring the tools that people will bring those amazing work that they're doing to our market. Oh, Catherine, I think you went on mute there.
Thank you. Josh, how do you ensure that Abaxx, as a relatively small company, doesn't lose focus on the most important issues when it's developing so many different things at the same time? New futures contract, new stock exchange, new ID system, and so on?
Yeah, it's a great question. That's why we've got a team in Singapore and globally, that's only focused on the exchange, and so that's the part that all of our resources and the bulk of our balance sheet is going to right now. But that said, I think about this as like Lego blocks. You're building different pieces that can be used elsewhere. So instead of just building everything for one system, you want to have a development cycle that thinks about, okay, I'm building this little tool. How can I use it over there 2 years down the line? So that's the way we think about it. Is we're a Lego block factory as far as our technology. We want to make pieces that can be used elsewhere without losing our initial focus on actually getting this exchange right.
Question from a US-based investment advisor who asks, I cannot add Abaxx to my model portfolios due to your current registration status, i.e. blue sky, across the US. Do you have any plans to upgrade your registration status anytime soon?
I think that's a question a little bit in the weeds that I'll have to talk to some of our legal and capital markets. I will say that we actually got the formal OTCQB designation in the US. Now that we've filed our annual financials, we will be able to upgrade to the QX, which for many brokers, basically makes us, no longer a deemed penny stock, based on the qualifications. And over time, we will be looking at NASDAQ or the Singapore Exchange as other markets, but that's relatively early. So, we are looking to expand our investor base and liquidity for shareholders. But it's really sort of stepwise, and we can't get too far in front of ourselves here.
Okay, well, I think we have one last question. This one comes from Cormac, and given everything going on in the industry, what does the resource industry look like in 2050? I think that might be for both of you.
Robert?
Well, 2050. By then, it'll be the Revenge of the Miners, opening soon at a theater near you. The hydrocarbon companies and the economies that are entirely dependent on hydrocarbon have a really big long-term problem. If you look at the Russian economy, how important is crude oil to the Russian economy? You know, and so they're going to be forced to, you know, rely on their education and their history of technology and transform their economy. I'm sure they will. But 2050 is opening soon at a theater near you. That's basically tomorrow morning in the scheme of things. And the world is going to be rapidly different. It's obvious that technology is evolving at an ever more rapid pace. And so there's going to be a whole suite of super materials and a whole new way to use electrical energy. And you know, you just look at the evolution of battery technology or fuel cell technology. You know, it's going to change what is money. It's going to change the whole financial system is going to change. What we consider to be of value is going to change. So flexible technology like the ability to tokenize a shipment of LNG can also tokenize an individual diamond and prove that it was mined in an ethical way. And you can track that diamond right onto your finger. And so the ability to track everything is going to be quite revolutionary. Like you buy a drug, is it fake or is it real? Everything will be tokenized and followed and tracked and traded in a whole new way. And great companies, I've watched this company, Abaxx, change enormously from when I was there in the angel days. You know, the vision and the scope and the multidimensionality has changed very, very rapidly. Because you have a great group of people and you have adequate capital and they really get going. Man, things really grow fast. Back when I was younger, you know, we were looking for diamonds in Newfoundland and Labrador. And instead, we found nickel. You know, we'll take it. So, you know, it could be that tokenization that the same way that kid was able to buy a piece of virtual art for $69 million. There's something like ID++ could be a monster that, you know, is fantastic for all of us. But this company is definitely on an amazing voyage. And the amount of interest it's generated here in Singapore is quite incredible. And this town is linked to everybody on the planet. This is the happening financial market. So what a great place to, you know, to have as your epicenter. I'm so happy to have this here for local entertainment. I was just going down the street. I have some crazy rich Asians that moved in down my street. These kids are half my age. There is so much liquidity and so much action in Singapore. Canada is really like an old-fashioned fishing town by comparison. You know, it's like, it feels like you're going back to Newfoundland. I mean, this is Asia. You know, what's going on here is just so amazing. I would urge all of our friends in Canada to come take a look at Singapore and maybe take a look at what China actually looks like, not what they're telling you it looks like in the newspapers. So this is the perfect spot because Singapore was a British colony in the old days. People all speak English. Everybody understands the Western world. The US Navy comes here and refuels their ships, but the people are ethnically largely Chinese. So they sit right in the middle of these two crustal plates in sort of a trusted environment. And actually everything you're doing is finding a way to use Ethereum blockchain to generate trust so that trades can happen, that we can trade things. Like I did an IPO for a SPAC and I was told that there were 16,000 brokers on a Zoom call. I used to go up and down elevators, you know, proving who I was in the lobby and going up to meet somebody and meeting somebody half my age, trying to pitch them on something. And now gigantic financial transactions and roadshows are done through Zoom calls where we have to, you know, we have to trust each other. Speed dating, 15 minutes, multi-billion-dollar IPOs. That would be considered completely impossible 5 years ago. So if we, you know, it used to be that a credit card was that money. So everything's changing. The definition of money is changing. And to create a super cool market like this is a fantastic enterprise. and something worthy of a lot of interest, you know. And a lot of people don't want to miss the next great thing, you know, because the next great thing goes so fast, you never catch it, right? You don't want to be accused of missing the next great thing. So I'm so happy to be on this call. Thank you for the privilege. I'm Robert at Ivanhoe.net. If anybody wants to get in touch with me for any reason, I'm very happy to be an early investor in Abaxx, and I'm very excited to see what an incredible group of people you've put together to make this all happen.
Great. I really appreciate that, Robert. Maybe just for my last sign off, you know, part of the vision that we're focused on is I see I see, you know, even the capitalization of mining and resource companies changing, because it's going to need to, given all of the things we've talked about. And I think, you know, taking cues from the open source community in technology, I think that's going to be the one big difference. You know, I am very fortunate to be that sort of tweener generation where my older brother was you know, Gen X, and, you know, didn't even have email till his 30s, and my younger sister was digitally native, you know, 5 years younger. So I've been able to sort of, you know, be able to sit between those two generations. And of course, you know, going to the Colorado School of Mines in the late 90s and early 2000s, you know, you can see that the cultural change was happening in real time there. And I think we're going to do things very differently in the next generation in using technology, whether it's open sourcing, you know, block models to discover things better, and the way that tracks, and how we bring information to find deposits. I think that's going to change how we capitalize, how we trade. So, you know, we want to be a part of all of this. You know, again, you know, starting focused, but, you know, having a vision of where we're headed, and, you know, being, you know, very grateful to have people like Robert as, you know, as visionary investors to help, you know, guide us there. So again, you know, I think we're running over a little over here, and yeah, I didn't have to go up an elevator, and we had, I think, over 250 people on the call. So to Robert's point, so thank you, Robert, and thank you, Catherine, and everybody for joining us today.
Thank you, Catherine.
Thank you all very much.
That was a great pleasure. Peace. More later. To be continued.
Okay.
Thank you all very much.
Adios.